It's Monday the 8th, I'm FX Blue and this is CurrencyTransfer.com's market update. The headlines today are that the dollar rally continues, Brexit deal is 90% done and the Italian budget is just the start of the problems for the EU. Friday's non-farm payrolls show the US unemployment at its lowest level for nearly 50 years. The headline number was a bit of a missed 188, which was forecast, coming in at just 134,000 new jobs created. But that was more than compensated for by the upward revision of the August number, which increased about 35% up to 270,000 new jobs created in August. Wage inflation was a slightly more significant miss, falling to 2.8%. You'll remember that there had been hopes for a 3% reading here, which would justify the hawkish tone from Fed Chairman Powell. This week, following today's Columbus Day holiday, we have CPI inflation data to look forward to. Core inflation expectations are for a slightly higher figure at 2.3%, which would indeed reinforce the market view for supporting the Fed action. For now, though, the dollar index is around 95.65. Brexit rumours are gaining pace, having had comments from Ireland and the EU that a deal is about 90% done. We're yet to see any details of where the compromise has been found, particularly over the Irish border. And we're well reminded of the saying that there's no agreement without 100% agreement that we've heard many times before. But for now, at least, there is market positivity that a deal will be done. And for the time being, at least, it seems Theresa May has seen off any leadership challenge. After a brief flirtation below 130, cable is back up to 130.85 this morning. And following the row over the Italian budget, migration is now back in the crosshairs between Italy and the EU. Italy is the shortest journey for migrants from Africa, and they feel that they've been inundated with responsibility. And to date, they have refused to uphold the agreement that migrants should be processed at the point of arrival before then being moved on into Europe, most notably to Germany. As a result, Germany being the recipient of most migrants with their open door policy, they've suggested that they could start chartering planes to fly unprocessed migrants back to where they first entered Europe, most likely Italy. And the Italian Prime Minister has said that they will close their airports to prevent any such move. So a few tensions bubbling away beneath the surface there. But despite this week's ECB meeting expected to confirm progress of QE withdrawal, the euro is notably being driven by political events like the migration issue. Euro dollar had a pretty volatile trading day on Friday between 114.85 and 115.50. We will, of course, keep you posted. If you've got any questions, please pop them in the comments below.